It's Markets in Turmoil. That's right. 3 minutes on Markets and Money. I'm your host, Lance Roberts. Markets are looking to open sharply down this morning. Dow down over 630 points pre-market. Of course, NASDAQ down sharply. S&P down over 50 points at the open. It's going to be a lot of selling right at the open day. Something that we've warned you about previously and been talking about kind of ad nauseum over the last couple of weeks. But is this the big one? That's the question. Again, a couple of things here. We finished out on Friday just a smidge below the 50-day moving average. And again, we continue to see the selling pressure in the markets ever since we got our money flow sell signals. So our signals have been working very well here about limiting and reducing risk. The one thing we've seen repeatedly, though, is that the market has continued to kind of find buyers at this 50-day moving average going all the way back here for quite some time. It's been this very kind of steady stair-step process moving higher. We have violated the 50-day moving average previously. That was back in March of this year. We did have a fairly sharp break like we're going to have today below that 50-day moving average. Immediately the next day, you had buying, got right back above it, and went to new highs very shortly. So could that be the case here again today? Yes, that is an actual possibility. So importantly, let's not panic sell here at the open. Let the markets open, do what they're going to do this morning. Over the last couple of weeks, we've been warning you about the risk and suggesting taking some action to reduce risk. If you haven't done so, it's too late to do so now. Let the markets open this morning, see what happens here. If we get some buying through the end of the day and markets kind of get a nice recovery towards the end of the day, that would suggest we could see some follow through because markets are oversold here on a short-term basis. And that would suggest that this little break might be just temporary. If we don't, and markets continue to sell off during the day and we finish down towards the low, well, then we could see some further decline here as we go through the last half of September. September tends to be a weak month anyway, so markets are really kind of just playing into that whole seasonal trend here at this point. So again, managing risk is important. It's a little too late to do it now here at the open to try to mitigate risk. Likely you could just turn out to be panic selling in the market. So let the markets open, see what happens today, and then we can make some better decisions, and I'll update you tomorrow on where we are, but we can make some better decisions either later today or in the morning about how to start adjusting risk in portfolios, even if we need to. Again, is this going to be a March type event where markets are fairly oversold? And again, we are. Money flow indicators are back down here to some of the lower levels normally where we get some buying coming into markets. MACDs are fairly oversold as well here. Again, another area where normally we start to see some buying in the markets. It doesn't mean that markets can't go lower in the short term. It is certainly very feasible that over the next 2 weeks we could see more downward pressure in markets, but doesn't mean it has to be the case. A couple of things that are weighing on that, of course, the Fed announcement this week. Will the Fed taper? What's going on with China and Evergrande Bank? Is that the next contagion? The Democrats, they're spending on their $3.5 trillion spending bill. Will that get passed or not? We have the debt ceiling issue coming up. There is lots of concerns weighing on this market currently, and these are also things that may keep the Fed from tapering as aggressively as markets think. That could also be bullish for markets. Lots of this we'll get into tomorrow again as we update you on where the market is after today's close. That's 3 minutes on Markets and Money. We'll see you back here tomorrow.